Well, hello everybody. Welcome to my channel. Here we discuss everything that is forex price action. Today I'll be taking you through my previous price analysis and take you through what I'll be expecting for this coming week. Let me start off with the New Zealand dollar. I think some time back I gave an analysis of the New Zealand dollar, and it mentioned that New Zealand dollar was actually tracing to the 6200, coming off a major resistance around 63.78 region. And I'd say depending on how price behaves around the 6200 region will determine the direction of the currency. Fast forward, we see price actually broke 6200, and I mentioned in my previous analysis that once that happens, we might see a move down back towards the 6050, 6080 region, the 6060s region, and the 6050 region. And we see price broke and actually even never came back to retest the level, just continued moving downwards. And I just wanted to give you a breakdown of what happened in this region. And I think it would be best to start off with the H4. If you look at the behavior of the H4 at the 6200 region, ideally you expect if price is retracing to a key level, you want to see an immediate response from the dominant order flow. What do I mean by that? If I expect this price to be bullish, I don't expect it to linger around a previous support area for a while. But this was not the case for New Zealand dollar. If you put it into a line chart form, you can see we consolidated around this 6200 for a while. That actually signals danger. It means there's a push. There's a push and shove between the bulls and bears. That's not what you want to see, especially if you're already bullish in the trade. And we can see what followed was consistent lower highs into the level, and eventually we broke. On the H4, we actually slightly retested, not the test I actually want. Also, the breakout candle does not meet the requirements of what I need to be a proper breakout. But regardless, the price actually rallied down, and that's been bearish since. So remember, in trading, there's always if-then scenarios. It's not fixed that a level will hold. It can actually fail to hold, and we see price reverse, especially given that this rally was coming off a major resistance. What do I mean major resistance? This level has held for quite a while. You can see it all the way from February 2023. Held, then retested in December 2023, and since then it has been bearish. So for this coming week, how will I be trading this particular pair? I'll be waiting for a retracement to the 6200 region. This is the weekly time frame. You see how the higher time frame actually literally filters out the noise. It's really clear. You can see what's happening. And I mentioned that if we break 6200, we get to move towards 6050. So that's what I'll be targeting. I'll be looking for a sell around 6200 and target 6050. Ideally, for such trades, you want to get in as close as possible to where you think my trade might go wrong. So get in as close as possible to 6200 region, a stop slightly above the 6240 region, and you target 6050. So the trade was to try visualize it. This is ideally how the trade probably look like. I prefer having my stop loss above the breakout candle, because if we see a bullish scenario that actually closes above this particular candle, then that negates my trade idea. So I put my stop loss where my trade idea is negated. And ideally that's where I will actually be trading the New Zealand dollar for the coming week. Remember, this is a daily chart. So the retracement may actually take some time before it actually comes to that particular level. And I prefer retracements that I don't like retracements that come from key swing points on levels. I will need to run a scenario where price hits 650, then I still put a sell here. No, I prefer it's broken. So before it actually reaches 50, I see a retracement, then continue the move. Otherwise, I'll actually be buying at 6050. If I don't get this trade, I think you're closer to 6050 than we are to 6200. I'm actually be buying for in a retest of the 6050 region. So the trade will ideally look like this. Remember, trading is if-then scenario. So my first if-then is if we return to 6200 before we hit the 6050, I'll sell. If we hit 6050 before we return to 6200, I'll buy. So both scenarios give me around 2.5 R, and that's actually good. To the euro dollar, this is just a recap of last week. I told you that I have a trade in place, given the fake out that happened around this region. So these are my trades playing out. We finally broke out of this consolidation, and we actually targeting some of these. The 10 is 1.0830. That was my target. Why is this my target? This is the point of release for this particular. We see this rally that led this bullish rally. This is the point of release. This is what Chris Lowry will say skinny leg. So with such scenarios, it's highly likely that price will come and seek liquidity around these areas, then see a slight bounce off. It might bounce here, not necessarily reverse the trade, it might bounce off. Though I don't like how it's behaving. It was so close to my target, so close to reversing upwards, but I'll monitor. Let us see, I still have the trade in place towards the target, but I'll not be looking to take in any further trades of the euro dollar for this particular week. I'll play a wait and see scenario. On the pound, I remember I mentioned that we'll see a retracement towards the 184.5 region or 184 region, and it will probably go back to the 188 region, and that's exactly what happened. Sadly for me, I did not get a fill. Reason being, I like when retracements come to the breakout region. So I was targeting an entry around 184.34, but I had forgotten to notice this swing point. Remember support and resistance are zones, and the zone actually looks something like this. This was the entire zone. So the best case entry is usually at the upper board of the zone here, which is what price did actually trace to that zone, which coincide with this low around 184.50, and it actually went and it has hit a multi-year top around 188. Usually in such scenarios, it's hardly will price continue. Where ideally we'll see a retracement, and you can see signs of that. There's a spinning top showing indecision at that key area. If you look at H4, price actually broke out and immediately closed below the level. In such scenarios, I usually like to short. Actually, if you see price break a key level and immediately close, look for retracement to that level. Look at retracement to that level and short. If you look at this candle, it completely engulfs 1, 2, 3, almost 4 candles, buy candles. Look at the bulls respond. Very weak. The bullish response is very weak. Now compare these bullish candles to these ones. You can see the ranges. Compare the ranges. I foresee that will be going lower for the week, and if I was to trade these, I probably target around the 186.16 region. So that's an update on the pound yen. Now that we have looked at our previous trade ideas, let us look at what I anticipate to happen this week. And I would like to start off looking at the DXY, the dollar index. What's happening in the dollar index actually will give a clue of what will be happening in some of the correlated pairs, especially the dollar, the euro dollar, the Swiss. And we can see that the dollar is bullish, and I love such breakouts. This actually meets my pre-requirements for a valid breakout. We see several touches, an EMA carry, a squeeze before breakout. So for the coming week, I'm expecting a retracement of the dollar, and retracement of the dollar, and this actually might cause me to actually close my euro dollar trade, because the euro dollar trade looks like it will be going higher. Remember the correlation between the two. So I'm actually close the trade in anticipation of the dollar going at least lower for a while, just to retrace to the broken level around 102.60. But overall, I'm bullish on the dollar. I expect it to at least reach these highs of 104 and probably go higher. And given that dollar scenario, let us look at pairs like the USD Japan. I expect the same scenario in USD Japan. I'm actually expecting a retracement. We just hit a intermediate zone. It's not really a major resistance zone, but you can see clearly it acted as support. Price broke, reversed, rolled reversal level, and price is actually showing indecision in that level. So for USD Japan, I'm actually bullish. I'm looking for retracement toward the 146.40, the last broken region. And if that holds, I'll actually hold the trade and target these major highs around I'd say 152. 152. So the trade will probably look something exactly a trade I put this week. I love how it's bullish. I said as long as price is above the 20-day exponential moving average, I'm actually bullish. And I love the bullish scenario that actually played out here. I love reversals that happened in this manner, where you have swings getting shorter and shorter. Look at this swing. Failed to clear this previous swing point. Look at this shorter swing, failed to clear, and what followed has just been bullish. You look at the number of green candles, compare that to the number of red candles in this move, you can tell the order flow is clearly bullish. So for now, there's a pause in the market. Let's look at the H4. I'll be looking for a retracement towards this broken swing point and target the 152 region. So that's the dollar yen. The Swiss, same scenario as the dollar. I'm expecting a retracement. They are correlated, and I'm expecting a retracement to the 85.50 region. This is a previously broken region. Ideally, when price breaks a region, usually if let's say it breaks a high, use that high as a reference point for your next trade, because usually price will most likely retrace to that particular level, and that's what I actually expect for the coming week on the Swiss. And if you look at the weekly, these are the type of reversals that I like. Actually, these ones can actually lead to a very sustained move upwards. Why? We have a key swing point. This is a 2023 July low. Broke. Price did not even spend more time below the level. An immediate retracement. We did not see price continue in its bear rally. Immediately closed up. And look at this bull candle. I love breakouts that happen in this manner. Why? Majority of this bull candle body is actually above the breakout level. See the wicks? I'd like to see price retrace to this level and probably have a stop loss below this candle wick and target the next key level around 87.50. Though the levels of the USD Swiss are not really clear, but I'd be bullish around the broken level around 85.50. Just wanted to show you something else on gold. Gold is actually consolidating just below its all-time high of a level around 2070. The long-term trend is actually a consolidation, but of late we've been seeing weak rejections. If you look at this swing point, came all the way. The second touch came all the way. Then look at the third one, did not come all the way. Usually this one is a sign of bullishness. Look at this one. Look at the last time. This was in December. Look at this candle. Look at that week. At some point, this was a bull candle all the way to 21. This is the weekly, 21.40, and it just closed below the level. But there was no continuation of this particular rally. So this is still a battle between the bulls and the bears, and I'll be watching out to see how it plays out. But I foresee a scenario where 2070 might actually break, and we might see gold continue in its all-time highs, at least for the coming year. If that's not the case, we have an intermediate level in around 2005 level, 2000 level. If that breaks, I will take a shot targeting the 1937 region, but I'll be really careful with any shots on the gold, especially given a trading strategy where I trade the higher time frame, which ideally looks bullish for now. But the current trade is actually, we are caught in a range. So let's wait for clarity. Yeah, let's wait for clarity. Good trades are found. Don't go through trades. We don't go to charts for the sake of looking for trades. Ideally, a good trade is one where you just open a chart and it's there. So for now, there's nothing. It's clearly a range, and I don't want to be caught into this mess. Canada, Japan, correlated to the USD yen. You can see it's bullish, just like the USD yen. I'll actually not be trading this. I just wanted to show you the plays that happen. I love horizontal breakouts. I actually trade horizontal breakouts. I'm not a fan of diagonal breakouts. I use is there a chart where I actually have those there, where I have trend lines. I use trend lines just as a direction filter, but not necessarily as a support resistance level. I only trade breakouts of horizontal levels. That's what I wanted to show you with Canada and Japan. currently above the 20 EMA, my direction filter. I don't really rely on it. I just rely on price to form my bias for the coming week. But it's actually coming to 110.54, also a key high. It'll be interesting to see how such moves play out for the coming week. So all in all, that's my analysis for the week. Let's see how it works out. Just a recap. For the euro dollar, I have a trade which I'm thinking of actually closing, given I expect a retracement in the dollar. Pound yen, the trade worked out, although I missed an entry because I was being too, how do I say, aggressive. I wanted really a fill at this level. We didn't quite get that retracement, but we are currently at an all-time high around 188. So we'll see how it plays out around 188. For the New Zealand, price did not retest to 6,200 as I anticipated, at least on the daily. So I have two scenarios. If it doesn't retest to 6,200 before it hits the 60.50, I'll just buy at 60.50 because I expect 60.50 to actually hold at least not reverse the trend, but in the short term to give me something. Yeah. If we do retrace to 6,200 before we hit 60.50, I'll actually sell. USD Swiss, I'm looking for retracement towards the 88.50 region, and I'm bullish. Now this is a chart actually where I have trend lines, so this is just a directional filter. Usually if you see, let's say you do trend lines like this, then you see it getting steeper and steeper. It means the order flow is heavily skewed towards one direction. Like this one was heavily skewed towards the bear side, but that seems to have changed. For gold, I'm just giving you analysis of the play out in and around the 2070 all-time high, currently consolidating. So this is something I'll actually be looking at for the rest of the year, see if I can get a nice position trade in it. For the USD Japan, I'm actually looking for a retracement towards 46.38. I'll be buying it, and I'm targeting this is a major high around 152. Point of confluence. Why do I mean point of confluence? It's a KSP, key swing point high. So price actually go all the way to low this. And it's a confluence of resistance, meaning the intersection of horizontal. We see horizontal resistance and a big figure, 152. Remember support and resistance is a range. So around that region, 52, I expect a sell. The DXY, giving us a sense of direction of where the dollar is headed for the coming week, which is bullish, but I expect a retracement. So I'm expecting a retracement. And I love how price broke out. I love how we are above the 20 EMA, and I just love this price action in general. And Japan, related to the USD Japan, actually not be trading this because I prefer the USD Japan trade to the Canada Japan one. So that's it, traders. See you next week. May you catch some pips. Let's see how this actually plays out.